What a wild housing market we have right now. I'm going to talk about what's happening right now with the U.S. housing market regarding home prices, housing inventory, price reductions, and much, much more. This is based on my weekly update I make for you guys from Realtor.com. I share my own analysis of their data. So here's the article from Realtor.com. And by the way, if you guys get any value out of today's video, then please hit the like button. Also, consider subscribing as well. We just reached 101,000 subscribers on the channel. Absolutely mind-blowing. Also, I received the other day a silver play button which shows how I have 100,000 subscribers. So I want to do an unboxing of that. Haven't even opened up yet, but I want to open up for the first time and share that with you guys because I appreciate you guys your support so much. So let's get into the video. This is an article from Realtor.com just posted on November 14th. And again, I don't even read their analysis. And again, go to Realtor.com/research/data. Click on weekly inventory. If you guys want to see weekly trends, if you guys want to see monthly trends, you can see how this compares to years past, going back, I think, till 2016. Anyways, click on that link right there, and it takes you more or less to this information. Asking prices, the change from 1 year ago, active listings or housing inventory, new listings, the amount of people listing their house for sale, days in the market, the increase in how long it takes for a house to sell, and also the increase in the number of price reductions. But I'll share some other trends and also provide a summary below as well. This video I make every week kind of summarizes what happened with the housing market over the past couple weeks. So let's get into this here. Asking prices actually decreased by 0.2% year over year. This now marks the 24th consecutive week in which asking prices were flat or down from the 12 months prior to that. Asking prices are down because inventory, of course, is much higher right now than it is 1 year ago. This means that there's more competition amongst other home sellers. In other words, more home sellers have to compete against each other, which drives down home prices. Additionally, asking prices are negative as well due to affordability constraints. Of course, we have elevated rates, prices, and also elevated home insurance rates as well, which is causing sales to remain at relatively low levels. Generally speaking, talking about national trends, right? Every market's different. I'm going to share also how we saw a giant increase of new home sales in October in the Sacramento region. So every market's different. All right, let's talk about inventory numbers. So inventory rose by 26.1% compared to the same week in 2023. This marks the 53rd consecutive week in which inventory was higher compared to the previous year. So basically 1 year in which inventory has been growing from the previous 12-month period. However, the gain of 26.1% last week is the smallest change since the end of March this year. This is likely due to a sharp rise in new pending home sales and a low amount of newly listed houses. So demand rising faster than new supply hitting the market. So let me share that with you guys. This is pretty crazy. This was posted from Realtor.com on October 31st. One of the first websites that share monthly trends from the previous month. If you want to see monthly trends from NAR, for example, you have to wait 3 weeks after year end or after a month end. Same goes for the California Association of Realtors. Anyways, looking at pending home sales, a measure of future closed home sales based on offers being accepted between buyers and sellers, that increased by 9.9% this October compared to last year, nearly 3 times more than last month's gain of only 3.5%. So in August, pending home sales rose by 3.5% compared to August of 2023. Now in September, that gain is at 9.9%. In other words, we're seeing a fairly significant increase in the amount of people getting their offers accepted, which of course is implying that home buying demand rose in October compared to the previous month. So this chart is a little bit messy, but I love it though, because they share 2017 through 2019. Often when looking at other sources, they only share the past several years. So the brown line is below right there. So new pending home sales rose by 9.9%. Again, that's about 3 times higher than the 3.5% gain we saw in September. Now, here's what really caught my attention. Let me just zoom in here. In October, there was 420,000 pending home sales. That was higher than 2022, higher than 2019, 2023, 2017, and 2018. The only years for October in which pending home sales were higher, of course, were 2021 and 2020. So big picture, when we see a sharp increase of pending home sales, that depletes the amount of houses for sale, which is probably one of the reasons why we're seeing this kind of like slow down in the growth rate of inventory. But on top of that, we're also seeing fewer new listings. So for example, it says here, newly listed houses were 4.9% above last year's levels. That's this October. That was a sharp decrease compared to September's rise of 11.6%. So in September, we saw a nearly 12% rise in new listings. This October, it's only at 4.9%. So let's have a look at this chart going back to 2017. It did decrease significantly in October. As you can see, in September, it was up by, how much was it? Up by nearly 12%. Now it's only up by 5%. So we're seeing a sharp pullback in new supply in the market. In contrast, we're seeing a sharp increase in home buying demand, as evidenced by that big increase of new pending home sales. So taken together, this is one of the main reasons, in my opinion, why we're seeing this kind of like slowdown in the gains of inventory compared to the previous year. This deceleration of inventory is, of course, bad news for home buyers. But the good news, though, of course, is that we still have far more houses for sale compared to a year ago. It's still up by 26%. Not as big as the gains of over 3% we saw about 1 month ago, but it's at least somewhat of a good news that we have more houses for sale, more options for home buyers, which puts downward pressure on prices. If you guys are looking to buy a house, here's my advice for you guys. Of course, you want to look at what's happening at your market. So if you're looking to buy a house in Austin, Texas, for example, research what's going on in the market. I'm only talking about national trends, which means that some markets are experiencing the same, but others are vastly different, of course, right? So my advice for you guys, especially in areas that have a lot of houses for sale compared to 2019, that's areas like in Texas, Tennessee, Utah, Colorado, etc. We're seeing a lot of houses for sale. So my advice for you guys is look for houses for sale that have been sitting on the market longer, because home sellers that have their house listed for sale in November and December tend to be a lot more motivated to sell compared to the spring home buying season. Also, here's something added as well. I was thinking about this in my drive this morning, is that if you guys are looking to buy a house, let's just say sometime this month or maybe early in December, if you guys want to buy a house, you may want to look into buying a brand new home or brand new home construction, especially for builders. I might make a video about this, so leave me a comment below if you guys want to hear more about this. But if you guys want to get a deal on a brand new house, then go find a house that's move-in ready. In other words, the builder has already built the house. They're just waiting for the house to sell so the buyer can move in and they can write that in their books. So you might want to do that, but also look for builders in which they have a fiscal year end of 12/31. So their fiscal year ends in December 31st. Not all fiscal years end at the end of the calendar year. So every builder is different. So you might want to look at builders in which their books are going to be closed out on December 31st. Therefore, they have this big push to try to get more home sales in November and December so they can have a better year that's being reported. So to summarize that, you might get a better deal on a brand new house towards the end of the fiscal year, but also for a move-in ready house as well, because of course there's a lot of sunk costs on building the house, and a builder is much more motivated to sell a completed house compared to a dirt lot, for example. Let's also discuss the bad news for home buyers as well. The bad news is that even though housing inventory is higher compared to 1 year ago, the gains are losing momentum for the past 7 consecutive weeks. In other words, 1 month ago, inventory was up by about 30 to 33%. Now it's only up by 26%. So we're seeing this deceleration of inventory. It's higher than last year, but the gains are losing momentum. Here's my key takeaway for you guys. Inventory growth has been stagnant, mainly from a low amount of houses being listed for sale. For example, ever since early May this year, new listings have been up from a year ago by single digits for the most part. Prior to that, it was up by more than 10% for the past 2 consecutive months. Before I share some trends regarding new listings, let's take a look at my own analysis of Altos Research.com's data regarding inventory levels, because there's approximately 155,000 more existing houses for sale for the week ended November 8th compared to the same time frame in 2023. That's an increase of 27% year over year. 2 months ago, though, this kind of goes in line with this deceleration. 2 months ago, the gain of inventory levels, according to AltusResearch.com, was a gain of 38%. Now it's only up by 27%. On top of that, last week when I made this video, it was up by 30% year over year. Now again, it's less than 30%. So we're seeing this deceleration in which inventory is higher than last year, but the gains are actually getting smaller each week. Unfortunately, exactly the opposite if you guys want to see home prices crash, because we're seeing supply basically losing momentum, and we're seeing an increase of pending home sales. In addition to this, there's around 223,000 more houses for sale right now compared to the start of this year. It has increased by about 45% year to date. Compare that to the same time frame last year, though, we were only up by 20%. In other words, inventory has grown twice as fast so far this year compared to last year. That's good news, right? It's also rising faster than pre-COVID as well, looking at data from the National Association of Realtors. So inventory on average rose by 16% from January through September in 2017 through 2019, versus a gain of 38% so far this year. That's January through September, according to NAR. But the year-to-date increase this year is much less than the same time frame in 2022. Back then, it rose by 45%. Home price growth should slow down due to 5 main reasons. Number 1, the decline of asking prices of houses for sale, like I mentioned. Number 2, more inventory. Number 3, seasonality, because home prices kind of tend to wind down in the slower time of the season. Number 4, of course, we have a sluggish rate of home sales, and of course, we have elevated mortgage rates as well, rising above 7% as of Friday, November 15th, on average, according to the Mortgage News Daily. To summarize, inventory is rising more than twice as fast as last year and pre-COVID, but still rising slower compared to 2 years ago. Lastly, even though we have more inventory, we still are lagging behind 2019 for the nation as a whole. We're down by about 17%. All right, in regards to this kind of momentum being lost of housing supply, one of the culprits again is a lack of new supply in the market. As I shared with you guys, looking at data from Realtor.com for October. But as of the week ended November 9th, new listings only increased by 1.7% year over year. So new listings have gone either down slightly or have increased by less than 10% since the end of July this year. In contrast, they rose by over 10% from February through April this year. Deceleration of listings, and of course, a deceleration of new supply in the market. Therefore, the growth rate of new supply in the market has stalled, causing the inventory growth to stall as well. Let's have a closer look at this, because ever since early February, new listings rose by double digits for the most part, excluding mid-February through the end of March. Now again, new supply in the market has been less than 10% or flat really ever since the end of July. That's why back then we had inventory up by nearly 37%. Now it's only up by 26.1%. Let's discuss my key takeaways regarding this. New listings have lost momentum due to 7% rates. Once again, as many sellers, of course, are buyers. And there's probably a lack of home sellers or home owners who want to sell their houses and exchange their 3 to 5% rate and take on a 7% rate. This is pretty wild, because we basically had this lock-in effect for about 2 years now. It's also noteworthy that mortgage rates were lower at this time last year, but despite that, sellers have not come back. Instead, home buyers have come back, as can be seen by the sharp rise of new contracts being signed and a decrease of new supply in the market. This is exactly what I said would happen, right? A dip in rates would cause a bigger increase in home buying demand than supply or new supply in the market. In other words, when rates decrease to a 1.5-year low in mid-September, that caused a bigger increase in demand in October and a smaller increase in new supply in the market. In other words, more buyers came off the sidelines than home sellers. That's because every home buyer wants to see rates at lower levels right now, but not every homeowner wants to see lower rates because not every homeowner is a home seller. Now, I'm not discounting the fact that many home buyers want to see housing become more affordable in the form of decreases in home prices, but it's the data is supporting that a dip in mortgage rates cause a bigger increase in sales than new listings. Let's change gears again and talk about how fast or how slow houses are selling right now. So days in the market was at 9 days. So it took 9 days longer to sell a house compared to the same time frame in 2023. This marks the 27th consecutive week in which houses took longer to sell. This is much different compared to October last year through March this year, when houses were selling faster than the previous 12-month period. Here's the impact. Inventory is higher than last year due to houses taking longer to sell and sales remaining relatively low. However, new listings have completely lost momentum from the rise in mortgage rates, as sellers are often buyers as well. So that is keeping a lid on the growth rate of housing supply. Let's also discuss the increase in the number of reduced price listings, in fact, actually decreased. So last week it fell by 0.7%. So there is around 0.7% fewer price reductions last week compared to the same week in 2023. This is pretty crazy because this only marks the third time since the end of January in which the number of price reductions actually decreased. For comparison's sake, the week ended October 5th marked the 37th consecutive week in which price reductions were higher compared to the previous period. To me, this is a sign that home prices are not going to crash anytime soon. If you do want to see a housing market crash or to see a significant decrease in prices, you need to have an environment in which supply far outpaces demand, but at least on a national level, the data doesn't support that. In fact, have a look at this. Here is the share of price reductions according to Altos. We're at around 39%, has been decreasing for the past couple of weeks now. At 39%, this is actually on par with last year, but still lower than 2022. At that time, we're at 43%. However, at 39%, of course, this is higher than 2021 and 2020 when we had 3% mortgage rates, but it is higher than the same time frame, or I should say in end of November 2019, when the share was at around 36%. And now again, it's at around 39%. All right, let me provide a summary and also kind of a breakdown about what happened with the housing market over the past couple of weeks. Number one, asking prices have been down or flat year over year for the past 24 consecutive weeks. This is from more houses for sale. In other words, sellers have to compete against each other more often than not because we're seeing more competition, right? The decline can also be tied to a sharp run-up in home prices over the past couple of years, several years actually, and also home insurance rates, basically skyrocketing in areas in Texas and Florida, for example, and other parts of the area, the United States as well, especially in wildfire zones as well, in the foothills just east of Sacramento, for example. This is all keeping buyers on the sidelines, which of course is keeping sales at relatively low levels as well. Number two, housing inventory increased by 26% last week, but that was the smallest year-over-year increase since the end of March this year, deceleration. In my opinion, inventory gains are losing momentum mainly from a slowdown in the number of new listings combined with a rise in pending home sales. Real estate is local. As of October, according to Realtor.com, this is actually compiled by Resi Club Analytics, there's 8 states that had more existing house for sale compared to October of 2019. Those 8 states, which by the way is a big increase from the only 4 states we had back in August, Those 8 states in October were Texas, Idaho, Florida, Utah, Colorado, Arizona, Tennessee, and Oklahoma. On top of that, Alabama, Oregon, and Washington are not too far off behind as well, because they have slightly less houses for sale this October compared to 2019. But potentially in November, they could have more houses for sale. In general, this is why I'm mentioning this, in general, states and areas that have more inventory compared to 2019, obviously pre-COVID levels, are areas in which home prices are really slowing down or they're outright decreasing year over year. Number 3, we all know that the vast majority of homeowners who do have a loan on their house have a rate far below current rates. And of course, that's keeping inventory still well below pre-COVID levels. We are no longer seeing double-digit growth of new listings like we saw in February and March. Like I shared with you guys, I don't expect to see a huge surge in people deciding to list their house for sale compared to 12 months ago, unless we start seeing unemployment spiking. In other words, I don't expect this to happen unless we have forced selling. People forced to sell their houses due to a financial hardship. But as of right now, that is not happening at a larger scale right now. The recent rise in mortgage rates is also keeping new listings at bay, as many sellers are buyers as well. Why trade in your rate? Of course, 3 to 7%, like I mentioned. But we're still going to have around 3.9 to around 4 million home sales this year, despite all these issues and all these hurdles that home buyers have to face this year. So people sell, people buy due to life circumstances, divorce, job relocation, move closer to their family, death, etc. Number 4, the share of price reductions is about the same as it was last year, but still lower than the same time frame in 2022. I've talked about this in previous videos, the sharp run up in price reductions 2 years ago, but this year it's barely squeaking out a gain from 30 to 39%. Number 5, last week it took about 9 days longer to sell a house. Again, that's a lag indicator what our housing market was like approximately 1 or 2 months ago when the home buyer got their offer accepted. Days on market is a lagging indicator. And frankly, anything that has to do with a closed home sale is lagging. More leading indications is application numbers, people locking their mortgage rate, new listings really, pending home sales, etc. But wait, there's more. Number 1, average 30-year fixed rates were, keywords were, past tense, close to a 1.5-year low back in September. But right now, again, in mid-November, we're around a 4.5-month high. And again, this is after the Fed decreased the federal funds rate, and ever since then, rates have increased. So I hope you guys learned your lesson. If you guys were thinking that once the Fed decreased the federal funds rate, mortgage rates would decrease as well. But the reality is the Fed controls short-term rates, which is the federal funds rate, which is tied loosely to mortgage rates, but the fluctuations in the federal funds rate really impacts short-term rates such as HELOCs, home equity line of credits, credit card balances or credit card interest rates, new car loans, etc., savings rates as well. But in general, when the Fed decreases the federal funds rate, that does not necessarily mean that mortgage rates will decrease as well. In any case, housing affordability has improved somewhat due to a decline in rates compared to 12 months ago. In fact, rates about 12 months ago were around 7.5%, now we're around 7%. And of course, some areas have a big issue due to home prices absolutely skyrocketing over the past several years as well. Affordability constraints can also be seen by the 14-year low, the pace of existing home sales, according to the National Association of Realtors for September. I won't have October's numbers until next week, by the way. But we're basically on track to have the fewest amount of closed home sales for existing houses since the year 1995. Basically a 29-year low. Absolutely crazy. Number 2, despite a decrease in rates from 12 months ago, mortgage purchase applications only increased by 1% year over year. That was for the week ended November 8th from the MBA. Also, NAR reported that pending home sales for existing houses in September increased by 3% from 1 year ago. In contrast, new home construction sales, that's defined by a sales agreement signed between builder and home buyer, or a deposit taken by the home builder that actually increased more. It increased by 6% this September. Home builders are boosting home sales, as I shared in many videos. They're still offering all these incentives, which is driving home sales. Something I do want to mention that I'm just added in today's video, in the greater Sacramento area, the bigger region of Sacramento, October home sales were just released. Pretty crazy because October home sales this year were the second highest since October of 2007. The only other month or year in which new home sales in the region were higher was way back in 2020, obviously when we had 3% rates. So now we have 7% rates, and we're at the second highest level since 2007. Every housing market's different, but of course, what I'm seeing in my neck of the woods is that home builders are still offering incentives to home buyers, which is still driving home sales. That brings me to number 3. Looking forward for the nation as a whole, asking prices are down, inventory has been increasing, homes are sitting in the market longer, and price reductions are more common now than they were back in 2019. We have been moving towards a buyer's market, but of course, every housing market's different. So for example, inventory in California is down by 20% this October compared to 2019. In contrast, inventory has increased or is higher by about 10% in Arizona, Texas, Florida, and Tennessee. Number 4, the most important one. I appreciate you guys so much for watching today's video. Sorry this video is a little bit longer than normal. Please like and subscribe if you haven't done so already. Have an amazing day, and we'll see you next video.